Have two very interesting conversations as always, but let's start with the first one. Average prices of goods and services have continued to improve on the back of stable macroeconomic conditions and foreign exchange, forex, food supply, and logistics. Now, ahead of the release of Consumer Price Index report today, we expect that figure to come up today by the National Bureau of Statistics. Independent consumer surveys and econometrics models surveyed showed continued disinflationary trend, with the headline inflation dropping by more than 100 basis points. Now, this report indicates that inflation rate dropped for the 8th consecutive time to about 14% in November, as against 16.05% recorded in October. It had stood at 18.02% in September. The disinflation trend, which started in April, had seen inflation rate declining from 24.23% in March to 23.71% in April, and thereafter steadied to 16.5% in October. My guest is Mr. Tajuddin Ibrahim. He is the Director of Research and Strategy at Chapel Hill, Denham. He joins me to look at all of these developments and, of course, the outlook for 2026. Mr. Ibrahim, thank you so much. It's good to have you start the week with us on Business Nigeria.
Thank you so much for having me on the show today.
Yes, thank you so much for joining us too. Now, let's start this conversation with a review of the level of disinflation that we've seen in Nigeria in recent times. Now, there are projections that we might even hit less than the 15% as projected by government. But let me allow you do an overview, since we started to see this disinflation trend around about April or something after the rebased inflation figures. What do you make, and what are your projections as we expect the NBS to release November figures anytime from now?
So interestingly, we noticed that they have actually released the November inflation number, and as we speak, the number for the month of November shows that month-on-month inflation rose to 1.22% from 0.93% in the month of October. That to my mind is a reflection of some sort of pressure coming from elements such as food prices, because we recognize the fact that the disinflation that we saw for like 2-3 months now in the past was largely underpinned by deflation in food prices. So we have November inflation printing at 14.45% year on year, which is a remarkable improvement when you look at the number, because it is, just like you said, much lower than the 15% that is being expected to end the year 2025. So we are going to end this year with November inflation being 14.5%, and we will be hearing about December inflation next year in January, possibly on the 15th of January as well, based on the calendar of the National Bureau of Statistics. But I reckon that that number may be a lot different in terms of the trend that we have seen so far, particularly when you consider the fact that the Consumer Price Index was rebased.
Yes, that is true. That's the big news. Nigeria inflation eases to 14.45% in November 2025. The figures are out there, and it looks pretty good looking at what we are closing the year with now. Let's now look at fundamentals surrounding this, Mr. Ibrahim. We've seen a steady foreign exchange market in recent times that has been steady. The disparity between that market and the other market is not like what it used to be before. We've also seen easing of prices, looking at market surveys and all of that. But the major challenge that everyone still talks about is the issue of trickling down to the people, to the masses. That's inclusive growth. That's what everyone is talking about. Now, what next if you're to look at it? What do you think? What are those quick wins for government to be able to make sure that these figures start to trickle down significantly?
I think one of the areas, where all of these figures can, trickle down to the government is for the government to ensure that all of the plans around increase in revenue, is directed towards ensuring that there is an investment or an increase in investment in such a way that we are going to see the benefits for Nigerians as a whole. And what do I mean by this? I mean, the cost of doing business really, really has to come down. And for the cost of doing business to come down, we must see an increase in investment, particularly when we talk about the power sector. So that, to my mind, will over time lead to affordable, power by Nigerians. And when you can afford, power to do your business, to power your business, then we'll be talking about you feeling the impact. And another area that, we really need to work on, to my mind, is around the road network. And I say road network because the poor state of some of these roads, is the reason that the cost of doing business, for instance, for some of the small and medium enterprises, the cost of doing business for them is still high. If we have, good road network across, Nigeria, particularly in regions where food, items are being transported from the regions where they were produced to the regions where they are consumed, I reckon that, the cost of, food, for instance, can also moderate on a sustainable basis. What we have seen in recent months, the moderation we have seen is what I can call seasonal moderation. And the question would then be, after the harvest season, can we have a situation where food prices are sustainably low for Nigerians to be able to afford? I reckon the answer for now is no. So that is one area that I believe the government can also look at. And in looking at that direction, it is also important to ensure that storage facility is something that is at the back of the mind of the government in terms of what they also have to ensure we have up and running. Because if storage facility is not available or is inadequate, then there is no way we can talk about storing food to preserve the quality over time before they are sold in the market. So that is another area that can ensure sustainably affordable food prices. I reckon if we can begin from all of those elements, then we can be talking about the impact trickling down to Nigerians. And let me say this as well. It is not like the impact is not trickling down. It is just that it is trickling down at a slow pace. Yes. For it to be accelerated, there is need also for accelerated investment to ensure sustainability of all of those gains to Nigerians over the medium to long term. Those are the way I think we could begin to think about it.
Interesting stuff. Now, let's take a step to look at your 2026 economic and market outlook as released by Chapel Hill Denham. I see a lot of interesting figures, I must say, in this your outlook, talking about the best case scenario and, of course, worst case in all of it. Let's start with the GDP projections. Of course, we've seen what inflation looks like now for November. We wait for December, where there will be a lot of spending, and everyone is talking about what that holds for Nigerians. Now, you have a 4.47% best case scenario and 3.97% best case. Worst case, 3.85%. And of course, end year inflation too. Give us an overview of some of the key points in this outlook before we now maybe go to some specifics?
To start with, I think it is important to mention that Nigeria seems to have, fared well in the in the year 2025. So we seem to be ending this year on a solid note when you talk about macroeconomic indicators. So looking at the real GDP, for instance, we reckon that we most likely are going to end this year at nothing less than around 3.8 to 4% in terms of economic growth. And I think all of the elements in terms of the policies implemented by the government look like they are in line for Nigeria to sustain the GDP growth that we have seen so far into 2026. So in 2026, we believe that our growth will be very close to 4% on the assumption that we maintain the momentum in terms of crude oil production. That is number one. Number two, on the assumption that agriculture sector, remains resilient, particularly when you talk about, food output and how much the government is willing to support that sector in terms of provision of fertilizer and some other elements that can underpin the performance of that sector. No doubt, that sector can still grow further, but what we see from here is a situation where the growth is not below 2 to 3% for next year. So that, to my mind, will underpin, what looks like 4% economic growth for the country in 2026. Let's talk a bit about, digital economy. Digital economy, to my mind, is something that is going to be very important for the country when you look at the projection going into next year, particularly talking about, all of the expected infrastructure investments by the ICT sector. And given the fact that the government is also supportive of the growth of the sector in this regard, so we remain optimistic that the ICT sector, for instance, will continue to underpin the overall growth of the economy. Where we have a bit of a challenge or concern is the manufacturing sector, considering that we have a situation where interest rate is still elevated. When you have high interest rates, where the monetary policy rate is still high at 27%, it is still not helping the manufacturing sector, because we have bank lending rates staying high at over 28, over 30% in the based on the perception of risk of the borrower in this case. So we expect the monetary policy to look in that direction to support economic growth via relatively low interest rates next year. Inflation next year, we believe, will remain benign in the sense that we see inflation printing as low as 14% on average, 14.3% on average, for the entire year 2026. And if you look at that number, end of the year next year, most likely inflation will be as low as 13.06%. Food price movement, which is largely going to be influenced by robust harvest, will continue to play a role. That is number one. The second element, to my mind, is what we are seeing on the currency front. We continue to see the stability of the naira to the dollar in terms of exchange rate. We continue to see a relatively more efficient CBN in terms of the mechanism around the trading of the currency in the FX market. Bearing all of this in mind, and also adding the fact that Nigeria continues to be a good investment destination for foreign portfolio investments, then when we put all of this together, I reckon that inflation, to my mind, will be more to the downside than upside, given all of these elements. So we are positive on our outlook in terms of GDP growth. We are also positive on our outlook in terms of inflation going into 2026.
Brilliant stuff. Let's see crude oil, price of crude oil now in this your release, and we see your projections. Best case $60 per barrel, base case $55 and worst case $50. My concern is the fact that already we are below our budget assumption, which is something above $70 per barrel the last that I checked. Now, this to me looks like a challenge. How do we address this, and what are the fundamentals driving the price of crude that is bringing it to this point at this time?
So we expect output to be robust, next year, particularly when you consider OPEC Plus and their responses to the market dynamics. So that is a major element for consideration, and also in terms of demand most likely will be soft, somewhat because of the tension between the U.S. and China, and that will have an effect on crude oil prices. That, to my mind, is something that can drag crude oil prices much lower, moving towards $50 per barrel level. And when over time, because it becomes relatively cheaper at that level, we could see it being bidded up, to levels that looks more like $55 per barrel. No doubt, it is going to be a major challenge for Nigeria from a budgeting standpoint. But the reality, to my mind, is that we have to bear in mind as a country that crude oil prices are way too subjected to global politics than one can imagine. So it is on the back of that I reckon that the plan should be more around building a more robust output in terms of production and also sales to the market, because prices would not be easy to control. What you usually can control and build on is your production as a country. This is the reason I believe that Nigeria next year should look more towards around improving the production level. And I think that is going to begin to materialize as quickly as expected, because next year we are going to see all of the investments that have gone into the oil and gas space so far this year by businesses such as Aradel, such as Seplat, via M&A transactions. All of those transactions, to my mind, next year will lead into an investment in oil production next year, and that can help to boost our output. So we should be able to partly cover up for the expected moderation in oil prices. And this, to my mind, also is the reason that I believe the government should also look a bit away from oil and focus a lot more on non-oil revenue generation for next year. Secondly, also focus a lot more on what is called the independent federal government revenue to boost the overall revenue for next year. So we plan more with what we can control and plan less with what seems to be beyond our control as a country, given global political events that could dampen the outlook for crude oil prices in 2026.
All right, we have 2 minutes to wrap up our segment now. What are you learning with regards to expected implementation of our tax laws by January? Maybe just wrap up with that.
Well, I think what is very important is for the tax authority to continue to educate all Nigerians. It is very, very important, because without the right level of education, compliance most likely, to my mind, will be very low. And if compliance is low, it means that implementation will be very close to zero, or will not be remarkable. So that, in my mind, is very important to ensure that Nigerians really understand how the tax laws will be implemented and the impact it will have on their income and the impact it will have in terms of the savings that it will be for them, because the tax is not going to affect everyone equally. Some Nigerians will have to pay more taxes, while some Nigerians will have to pay less taxes. So those that have to pay tax and be brought into the net should be well educated, so that everyone does not seem to avoid paying tax. Implementation, to my mind, must be the focus to ensure nothing less than 75% in terms of the expected benefit or pass mark by the government next year. I think anything short of that will be that the government did not go into next year being well prepared. I think they should prepare really well to achieve a score that is not below 75% in terms of implementation, given the enormous benefit it has for the country from an investment and savings standpoint, and also from the viewpoint of being able to rely more on revenue and less on debt.
Thank you so much, Director, Research and Strategy, Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Really great to see you as always. Do have a great week and, of course, compliments of the season.